An introduction to GST registering and the filing options. When you're looking to register or newly registered, there's important information you should know. We'll cover what GST is, how it's calculated, registering for GST, and the filing and accounting options. So, what is GST? It's a tax charged on most goods and services, and the rate is 15%. If you're adding GST onto your sales, then add 15% to the starting price. So if you're charging $100 plus GST, you calculate 15% of $100. This is $15, and your total charge including the GST is $115. If you need to work out the GST on an expense, you don't use 15%. This is because we're trying to work out 15% of the original cost, not 15% of the $115. To do this, we take the total cost, multiply by 3, and divide by 23. For example, if the expense is $115 including GST, we take the $115 and multiply by 3. This gives us an answer of $345. We then divide this result by 23 and we get a GST figure of $15. So to work out the GST content for a price including GST, take the total, multiply it by 3 and divide the answer by 23. To charge GST, you must be registered. If you're not registered, you can't charge it. Once you're registered, you must always charge GST to your customers. To register for GST, you must have a taxable activity. A taxable activity is defined as the supply of goods or services on a regular or continuous basis in exchange for cash, credit or barter. If you have taxable activity, you can register for GST. If you don't meet this criteria, then you won't be able to register. Once registered, you'll be given a GST number. In most cases, this will be the same as your IRD number. It's compulsory for businesses to register if they've earned, or expect to earn, more than $60,000 in any 12 months. That's not just for the tax year from April to March, or a calendar year from January to December. It's for any 12-month period. It's up to the business owner to monitor their turnover and register if they meet this threshold. $60,000 turnover for the year averages to $5,000 per month. If your sales are consistently $5,000 or more per month, then you must register for GST. You can voluntarily register if your sales are under $60,000, as long as you have a taxable activity. If most of your customers are GST registered, then they'll probably like it if you are. There are advantages and disadvantages to being registered. The advantages are that if the GST on your expenses exceeds the GST on your income, you may be entitled to a refund, which will help with your cash flow. Being registered can also make your business appear more credible and professional, and you'll be able to claim GST on most business expenses. Some of the disadvantages of being registered are that you're faced with more compliance work, and it takes time to complete your returns. If you're profitable, you'll also need to budget for GST payments. When you register, you need to select your filing frequency and your accounting basis. Let's look at the filing frequency first. You can file returns on a monthly, 2-monthly, or 6-monthly basis, depending on your turnover. Most businesses elect to file 2-monthly returns. This means 6 returns per year and fewer transactions to account for in each return. It'll also mean smaller, more frequent GST payments. Alternatively, smaller businesses can choose to file 2 returns per year using the 6-monthly filing frequency. This may be a good idea if your records are well organised and you're good at budgeting. 6-monthly filing means only 2 GST returns per year and only 2 payments to make. If you're not good at record keeping or budgeting, then 2 monthly returns would be a better choice. Your 12-monthly turnover must be under $500,000 to use the 6-monthly filing option. The third option is to file monthly. Monthly filing is compulsory for large businesses with turnover more than 24 million. Now we'll look at the accounting basis. It's an important concept to understand because the accounting basis helps you work out which GST return a transaction is included on. Let's say your filing frequency is 2 monthly, February to March and April to May. You might have an expense with invoice in one period and the payment being made in another. For example, you might receive a bill for stock dated 31 March, but you don't pay the bill until 20 April. In this scenario, you have a GST invoice dated in the March period, with a payment date in the April-May period. The accounting basis determines which return to include this transaction in. Under the payment basis, you account for income and expenses based on the payment date. On the invoice basis, we look at the payment date and the invoice date. We account for income and expenses in the return covering the earlier of these two dates. For our example, if we're on the payments basis, we include the expense in the April-May return because the payment was made in April. If we were on the invoice basis, we'd include the expense in the March return because the earlier date was the invoice date of 31 March. So, on the payments basis, you include transactions and returns based on the payment date. On the invoice basis, you look at the payment date and the invoice date and account for the transaction based on the earlier of the two dates. Be aware that if you're on the invoice basis and it takes your customers a while to pay you, there's a chance you'll be paying GST on income that you haven't received yet. The important criteria for payments basis is that your turnover must be under $2 million for a 12-month period. If your turnover exceeds $2 million, then you must use the invoice basis or hybrid basis. The hybrid basis is a combination of the other two options. You'll account for your expenses using the payments basis, but account for income using the invoice basis. You can change your filing frequency or accounting basis if you meet the turnover thresholds we mentioned. For the latest updates, please go to our website and view the COVID-19 page. You can also contact your tax agent or ring our contact centre to discuss your specific situation.